Hello and welcome to Accounting Daily. Today we'll study rules of debits and credits, and there are three rules of them. Number one is what elements are affected. Number two, what accounts are affected. And number three, did the accounts go up or down? To remember the accounts is an acronym DC Idler. D stands for debit, C stands for credit, A for assets, D for draw, E for expenses, L for liabilities, E for equity, and R for revenue. We also need to remember the normal balances for each account. And to remember that, we draw a T account. The left side of the T account is always debits, and the right side is always credits. The normal balance for assets is debit, and some of the examples of assets are cash, accounts receivable, notes receivable, inventory, equipment, prepaid expenses, investments. The normal balance for liabilities is credit, and some of the examples of liabilities is accounts payable, unearned revenue, accrued liability, loans. The normal balance for equity would be credit, and equity is owner's investments or the retained earnings, sometimes also referred as the capital of the business. The normal balance for revenue is credit, and revenue is simply the sales of the business or the services provided by the business, sometimes also referred as the income from the business. Expenses are rent, utility, salaries, advertising, phone, and depreciation. And the normal balance for draw is debit. And draw is simply the distribution of profits to the owners or the partners. Now, I also want to point out that the 6 accounts that you see on the right top side of the screen are called the chart of accounts that help us to identify where the financial transactions should go. Before you go to the next lesson, make sure you know these rules and principles so you can apply them in the later lessons. So to summarize, assets, draw, and expenses will increase when debited and decrease when credited, whereas liabilities, equity, and revenue will increase when credited and vice versa. Before I go, I want to also go over the debits and credits in banking versus accounting. So let's say you deposit $10 in your checking account. Your bank statement will show $10 credited and increase that amount. And let's say you withdraw $10 from your checking account, your bank statement will show debit of $10 and decrease that amount. But wait a second, isn't that contradictory to what we just learned? The reason for that is, from the bank point of view, your checking account is a liability to them. So a deposit for them is credit and withdraw is debit. In accounting, debiting or crediting is not adding or subtracting. Neither debit or credit is good or bad. Debit and credit are simply two words used to identify the two sides of all financial transactions. If you have any questions, please leave them in the comment section. If you like these videos, please subscribe and give me a thumbs up. Thank you.